Hey, what's up, everyone? Today is September 30th, Friday. Markets are 31 minutes and then they're officially closed, but all the major action is done for the day. So, want to go over them real quick and what I'm going to be looking for moving into next week. So, another down day in the markets. The down days just keep piling up. The oversold indicator is just still screaming. Let me just show you here real quick. I mean, looking at the daily time frame over here, it just keeps on getting lower and lower. So one of these days, it'll start the move up. I thought it was going to be this week. 2 days ago, was that Wednesday? Yeah, you see, had the nice down day, but then price just kept moving it further. It's still bouncing off that two on the Fibonacci extension level, the 200 level, right there from this trade setup where I'm looking for price to pull back or to move back up to the low 4,000s from where it's currently at, but it just keeps getting pressed on down even further, so it is what it is. So looking for the intraday trading over here is a really good Friday trading, especially the morning session was very good. Lots of good movement. So looking at this one right here, this one was really funny because this one looked like it was going to be a really nice trade setup right here. I mean, it didn't start until 3:55 in the morning, but the problem with it is it never came up and closed above that line right there, so it wasn't a valid trade. Bounced right off the median line and came back down. So just want to show that even though it wasn't a valid trade, but there were a couple of other ones. Let's see here, just using the red semaphores here and the inside pitchfork. See, here was a real nice trade setup right here that was right at the opening of the bell. It came down, hit the median line, so it didn't close below it to start the trade down, but then it did close down here, rose back up for easy entry in right there. If you rode it all the way down to the bottom right there, that's a nice at least 16-point gain on the S&P 500 for that little trade. Is over in about 10 minutes, so easy peasy right there. So that trade setup is done. Then there were a couple other ones if you use the white semaphores. There's one right here. Going above it, resistance. It would have been possible to get in though because it didn't close all the way up here where it touched the line that completed that trade right there. And then we had this one right over there. We had price come break down right there. That would have been entry in. Down right there. It didn't quite hit it, but where if I did get in this trade, I missed this one. If I was in, I would have always have my exit slightly above off the line right there, so that would have filled it. But anyways, came back down and hit it. No questions asked right there. And so that's about it for that trade setup. There were also plenty of setups using the Fibonacci trade setup. We just hook it to the red semaphore until the red semaphore forms on the other way down over here. We just keep riding it down all the way down below. So looking at like this one right here, it came up, hit the 38, came down, hit that target. So then we just drag it down further, hit the 38, never hit anything, hit the 61, then came back and hit the 50 right there. So that completes that trade setup for it. And then there hasn't been a red semaphore formed down over here. So once it made the new low down here, we just keep riding it down lower. So we're just waiting for a retracement back up. But there isn't one here in the S&P 500. Looking here at the little bit longer time frame right here. As I mentioned a little bit ago, we're still just waiting for the pop up to the 4,000 mark. Everything it's severely oversold, so just waiting for that to happen. And until it does, look for look for more down days. But eventually it'll pop back up. So we'll see. Hopefully next week. That did happen this week, but obviously it didn't. Now on to the Russell 2000. We'll just look at the overbought oversold indicator. Again, just like SP 500, the Russell 2000 is completely oversold and is just going lower on the daily chart. For our chart, middle of no man's land, but the daily trumps the 4-hour chart. So yeah, we're still looking for it to get a nice pop up sometime eventually. So looking at this one, this is actually a trade that is open right now using these red semaphores right here. This one, and this one. Price came up, broke above it. That's what initializes it right there. We had a run down. Didn't break this low down here. If price does break this low before hitting this blue line up there, then we just move the exit to where the initial breakout was, which would be about right there, and that would be where the exit that we're looking at. But currently the exit is still at the blue line because it hasn't been broken. So right when the market opened, I was looking at this one. I just went ahead and got in and got out right there. Then ended up shorting it right there and got out right there for another trade. So So it's still open. I was looking, I'd get in for before the end of the day, but I'm gonna wait until the markets open either well, they open Sunday night, so probably looking to get in then, or maybe if I think there's gonna be some more downside, which I'm not sure much more. Wait until I'll probably have like an entry set up down around here. Hopefully that gets hit, and then just have the exit somewhere up, around over here. Obviously that's the hard exit up there. But then, as I mentioned a little bit ago, if price does break below this low right here at 1657.9, then the exit moves up to the breakout, and I'll just put the black line back on it from where it would go. So even if I got in right here, that's still a really nice move up. That's about 31 point move up there right there. But there could be a swing down below it, because that is the way I trade. It's not strictly day trading. Sometimes swing trading, it can take a day or two, sometimes even a couple days for it to get filled. So it's the way that it is. But that was the main one today. That is still an open trade for. There were a couple other ones based on using the red semaphores. I'm not going to cover every single trade, just the major ones. And then we have that one right there. You see that one just shot up, filled it right there. It price broke above blue line, hit that blue line, or the red line, hit the blue line right there. And then we had one moving down below. We're waiting for this to break the red line and go down the bottom. You see, used it as support right there, but it's just temporary. Closed below, and then shot on down and completed that one down right there. So just like S&P 500, waiting for a move up for the S&P 500. We'll skip oil and go to the Dow Jones real quick. We will cover oil, but we'll just go in line for the futures markets. We'll start the overbought, oversold again, just like the other two, completely oversold and going lower for the daily chart. So just waiting for it to move higher. And then we had a couple of trades using this red semaphore, and we're just waiting for the other red semaphore to get filled. So I was using this as trade setups. Here's the first one that we had. Price. Let's see. No, that wasn't one here. It was right there. Is price broke over the red, closed above it, and hit the line, the exit right there before it started retracing lower. So then we just keep on drawing it lower right there, and we're just waiting for price, because eventually this low down here somewhere is going to turn to the red semaphore. That's going to complete this. So just waiting for it to close above the red line right there, and then the exit will be the blue line for that trade for the Dow Jones. Going into the hourly chart, we're looking for, again, this one, well, not up there, it's going to be the green line right here for price to eventually come up over here up to about the 31,700-ish level for it. It's right around the 200 Fibonacci extension level. That's just where it's been collecting contracts down over here in that level, and about right there in that level. So you can see it's been in a range here for about, since when's that? September 23rd or so. So for going over a business week now, it's just been in a range right there. It's looking like it's going to break down lower, but I wouldn't be surprised if we get a fake breakout low a little bit, which we did get a little bit today based upon the previous lows. Get some more shorts trapped in there before we see it rocket up, just because the oscillators or the overbought, oversold indicators are saying that the market is so oversold, it has to go up sooner than later. So that is what we are looking for here for the Dow Jones as well. So both the S&P 500, Russell 2000, and Dow Jones are all completely oversold. We're just waiting for the pop up. And then moving to the crude oil charts. This is 1 hour chart right here, just using the Fibonacci retracement trade, hooking it to the red semaphore up there, because there hasn't been one down here on the downside right here at the low. So once a red one forms, this is already in a trade, so we can't get rid of it. But if there was a red one that had already been formed before this trade initiated right here, then it wouldn't happen. But based upon the 1 hour chart, the next exit is going to be the lower, this green box right here, $74.29. Now it doesn't mean for sure that's where it's going to go hit. That's just where it currently is based upon the setup that we're looking for the lows for. If price continues to go up without hitting the $74.29 area, or that line right there, then we're looking for the next area to be $84.54. If it hits that, then the exit moves to the yellow line right here, which is $82.77. And then lastly, if that still doesn't happen, or if the price didn't come down and hit the 50 after hitting the 61.8, then if price hits the 88.6 right here, then the exit moves down to the 61.8%, which is $84.54, and that would be the final movement for the trade setup. So those are the 3 areas that we're looking for that one here on the 1 hour chart. Moving over to the 5-minute chart, there were some good setups over here as well. We had using the red semaphores, this one, and this one. I think this one just had, it never closed above it. Yeah, see, just used it as resistance, never closed above it. So then we just move it on down to right here. Price closed above it and then easily went and hit the blue line up there for that trade set to be complete. So we're just waiting for it. If price continues to move down without a red semaphore forming right here, then we'll just keep on dragging that and looking for other setups for that one. And I think that's going to be about it for the setups. There was one right over here that we had. You can see price broke a low. Let me get rid of that one. Price broke above the red line right there. It came up and hit that one for a nice little trade for that one to be gone as well. So basically a theme for all the markets right now, the S&P 500, Russell 2000, and Dow Jones futures markets, it's extremely oversold, and we're just eventually waiting for that pop up. But until then, we'll just keep on trading the ranges, using the inside pitchfork trade, the Fibonacci trade, and then crude oil right now. I didn't even look at the overbought, oversold. But it almost got to oversold, didn't quite reach it, so we're still just waiting for it to continue to move down there on the daily chart. For the 4-hour chart, it's the middle of no man's land right there, so that is no help. So those are the markets. Have a good weekend. Stay safe. Thanks. Bye.